What's going on, guys? Welcome back to the channel. Today, we're going to take a look at the 4 most popular stocks people are investing in using Robinhood. And so the number one most popular stock this week on Robinhood was Apple. And it's not really a surprise. If you don't already know, Apple did release they were going to go through a forward split. If you're not familiar with what a forward split is, it's a good thing. It essentially means the company is doing so well that they are willing to increase the amount of shares that anybody can buy, and in doing so, it will actually decrease the share price of the stock, which therefore makes it more affordable for you and I to purchase it. So it's almost like an incentive for investors to buy because A, the stock is going to get cheaper, and then when it does become cheaper, more people can afford to buy it. So a company like Apple that's performing really well, that feels that they're going to continue to make money, doesn't really feel pressured by decreasing its share price, making the value of their stock a little bit cheaper because they feel they will continue to perform so well in the future that that share price is eventually going to increase. And boy, oh boy, wouldn't it be great to get more investors to pile into our company? And that is really sort of the logic behind a forward split to a degree. Now, what we're looking at here is a 20-year weekly chart. This is a very, very long-term picture. What I wanted to do was give you guys sort of a longer-term picture perspective, and then we'll dive into sort of a smaller time frame. What we want to do first is look at just how well the stock has performed over the past week. So if I zoom in, we'll do a little measurement here. Over the past week alone, it appears that the stock, Apple, is currently up about 7% or so, 6%, 7%. So over the past week, the Robinhood users are positive on the stock Apple. But as I said, let's take a longer term view of the stock. What we're looking at here is a standard deviation chart or a standard deviation channel. If you don't know what this means, essentially, by what we're seeing right now, it does say that the stock is overbought on the 20-year weekly time frame. So in the longer picture, we could be looking at a more bearish move to come from Apple because essentially we have gone so far outside of this channel that anything above the red line we can almost visualize or look at as a exuberant or euphoric market. And again, with that forward split right around the corner, the stock has been getting hyped up and a lot of news has been coming through to the market on Apple. Now what we want to do is go take a look at, say, a daily chart, a 1-year chart. Currently, the 1-year chart says we are a little bit overbought, but there is still room to run. In fact, it's very plausible you will see Apple all the way up to prices around $491 to $500. Because what we're seeing on the yearly time frame, this year alone on Apple, is we currently have up to about $492 respectfully. There is no reason as to why the markets cannot move there from a statistical standpoint. We have come from a lower buying zone into a higher selling zone, but it did seem logical with the hype out there that you very well might see Apple all the way up to prices of $500 soon before seeing any sort of real negative selling pressure. Again, that's all said that the market doesn't take some wild crash on us. Now what we're going to do is jump into the number 2 most popular stock. Oh, number 2 most popular coming up is Tesla. I mean, come on, obviously, everybody's talking about Tesla. I mean, Elon Musk has been putting people in space. He's been returning them from space. He's going to build an underground tunnel. He's got electric vehicle cars. He's selling shorts. I mean, the guy is pretty much everywhere and anywhere with his hands in almost every single cookie jar. It's kind of impressive. Not to mention, just recently, Tesla said they were going to do a forward split as well. So this is the same thing that Apple did. Now, again, it's up for debate whether or not Tesla is making as much money as Apple, which we all know they're not. But again, whenever a company presents the idea of a forward split, it can be seen as a very good thing for a company. And if you're familiar with what's called a reverse split, you'll know that it happens very often to penny stocks, and after they go through the reverse split, the price skyrockets and then it crashes. So if the same concepts apply, but in opposite, a forward split, the price will decrease and then go back up. So again, Coming around the corner here very shortly, Apple is going to be going through a reverse split. Tesla is going to be going through a forward split. Forward split. Apple and Tesla going through a forward split. You will see the prices of those stocks decrease, and there is a strong chance that you would then see them pick back up in prices shortly thereafter. Right now, what we're looking at is a 1-year chart on Tesla. But first, I want to look at the 20-year chart. Currently, the 20-year chart is extremely overvalued. There's a lot of euphoria right now in the stock Tesla. It's a very exuberant market. And as you guys know, there's a lot of hype surrounding the stock. It's the future of the world. Electric cars. We're going to go to Mars. I mean, everything that you could possibly think of to pump a stock, it exists here in Tesla. Shorts have been crushed. I've been wrong. I've been right. But nonetheless, from a 20-year perspective, the market on Tesla is overvalued by a lot, actually. Currently, the trend on the downside is about 1,150. For some of you that are first-time viewers to my channel, you might think that that is crazy. But we show this all the time. Intraday, we'll have stocks do the same pattern. They'll go way outside their channels, as we are seeing here on the 20-year chart, and then they will retrace back into the channel. We don't know exactly when, we don't know exactly how that move will unfold, but it does normally end up happening. So over the past week, we have seen the traders on Tesla make out pretty big. From the low of the week all the way to the high of this week currently, traders could have been making as far as like 20% on that up move on the stock. So over the week, Robinhood traders are the winners, but can that be long-term and sustainable before having a retracemental move in the market? That is the question. Now let's go take a look at the 1-year chart. On the 1-year chart, we are currently sitting at a very pinnacle moment. If I delete the drawings off my chart, you will notice something that's pretty unique, or not really unique at all. That's that yellow line. For those of you that tune in on our morning live streams every Monday at 8:30 a.m., you will notice we mentioned Tesla to reach this current price target, which was the yellow line. It does seem very likely we might hesitate here for a couple days. So for you Robinhood holders that are sitting in on Tesla right now is a pinnacle moment. You are at a squeeze spot. It is very likely that your stock could pick up in steam very quickly, very soon here, if in the event this market gets all the way through the price of, for now, $1,634. That price will change a little bit each day because the calculations are updating each day. But for now, basically over the price of $1,650, let's say, you could trigger a new squeeze in the Tesla market and see a big rip. But don't be surprised if tomorrow's red, or you see maybe a day or two of hesitation here, or right around this yellow line, because that is a resistance point. Now, if in fact Tesla is trading on this 1-year chart, the next squeeze could very well trigger all the way up to 2,000, which is that green line. And if in the event it does that, make sure to double back into my channel so we can get a fresh update for you guys. Because if it's trading up near that green line, might be a very good spot to take profit. Next thing you know, we're going to be going into the 3rd most popular stock that Robinhood users are holding. Stay tuned. And next on deck for number 3 is COVID-19. I mean, who would have guessed it? COVID-19, it just never seems to go away unless we get a vaccine. At least that's what they tell us. I have no idea. But for what it's worth, number 3 most popular stock on Robinhood is MRNA. That is Moderna Therapeutics or something like that. If you guys aren't already familiar, let's go take a peek. So this is MRNA. This is a stock that has been through the news wire, through it all day long regarding COVID-19 vaccine. They recently received some news that they had some type of deal with the government and they're going to be releasing like some odd 100 million doses of the vaccine. I could go into the news and read it for you, but honestly, I'm being a little lazy. I know it exists because I just read it a couple days ago. If you don't trust me, that's fine, but I can tell you it's right there. Go check it out. That being said, this stock has been getting pumped up for the vaccine news. As you can see, it's already run from like $20 all the way to a high of $91 just like this year alone. Recently, the other day, just like 2 days ago, is when they got the news about the 200 million dose vaccine deal, or like a $1.5 billion deal. Let's go take a look at that specific day. That specific day, the stock squeezed all the way up like crazy, attracted a lot of buyers, and that, ladies and gentlemen, is exactly why MRNA is one of the most popular stocks on Robinhood over the past week. I might as well show you. So let's scroll down here. If we go down, bingo, Jefferies reportedly says a $1.5 billion deal for U.S. for 100 million doses of mRNA or Moderna's vaccine could lead to more contracts from other countries. So they received this news. The stock went crazy. Robinhood users like, hell yeah, we're going to bank out. And then they got smoked. They got absolutely smoked. And now they're bag holding the stock. It's kind of an unfortunate event. I know I sound evil right now, but come on, I had to have some humor out of all of this. That being said, this is the performance of the stock over the past week. The stock is currently down about 12-11%. So, Robinhood users on mRNA, not doing so good, but I feel for you guys. Let's see what we have going for you. If we were to take a look at the weekly chart, we are coming from the green, right? So we're coming from an overbought scenario. We are selling back down. Currently on the 20-year chart, your statistical mean is going to be at about 52. So do not even be surprised if in the future you see the price all the way down to 52. That would be completely normal. That is a very fair value for the stock right now, based on where people have bought, based on where people continued buying, based on what people sold at, where they were willing to sell at. A fair value on all of those purchases is calculated at about $52. Let's take a look at the yearly chart. We might be able to get a little bit more accurate. So if we look at the yearly chart, we are currently on fair value. So for those of you on Robinhood that may have bought the other day around 75 on that news of the vaccine deal, you bought about $7 over the true value trend. For those of you that bought mRNA all the way up in the 93s, you were buying, basically $23 to $25 over true value trend. Right now is a very pinnacle moment, because if you look, mRNA has just been riding this trend here. If the bulls are not strong enough to support this stock, then you know what's coming next. mRNA might have one of these nasty sell-offs here, because it successfully is going to be crossing through its trend for the first time in a long time. If that happens, there's a high degree you will end up seeing the price of your stock on mRNA even down to 47. Let's see if we can find any sort of support that would be before that. Well, probably, and it'll probably exist on the 4-hour chart, which is probably at 58. So if in the event you see mRNA snap down later this week or early next week from that trend play, basically anticipate it should go down to a price of 58.52 before you see any real significant buying coming in. All right, ladies and gentlemen, off of the vaccine news and on to number 4, which is another technology stock, and I hope you guys like what we have coming up. And the last on the list for most popular stocks this week on Robinhood is Microsoft. Now, some of the most recent news or big events that could also have driven some curiosity to the stock recently, which isn't even that recent, was the news Microsoft was going to be closing all of its physical store locations and really diving into the online space, putting its products online, closing down store locations. Now, what this can probably do in the short term is obviously create more earnings. The company can actually become more profitable by closing down store locations. By closing down store locations, you're going to give up rental fees. You're not going to have to pay electricity and water and all those employees that are working in that space. Now, to know exactly how the inner workings of the business will unfold, whether or not the startup procedures to shift to this complete online workspace for selling products might actually be more expensive in the upstart, is all in the air right now. But long term, if Microsoft can successfully close its physical stores, It's going to avoid paying rent fees. It's going to avoid having electricity fees and water bills and all of those things that come with managing a physical location, okay? It can cut down on a lot of expenses, which in the future could obviously generate or turn a stronger profit for the company. Remember, anytime your expenses go down, your earnings automatically go up. That is why you see companies shave off or maybe lay off employees during a bad time. When the company is making less money, obviously they can't afford as many employees. But by cutting down employees, they're instantly going to add more earnings back to the company. So right there alone is why companies kind of go straight to laying off workers in bad times or making less money. And as soon as they do that, the company earnings are instantly going to boost. And if you've ever run a business, whether small or big, you will know that the number one expense for a lot of businesses is what? Employees. So by cutting them first, you're instantly raising profits pretty quickly. So by closing all physical store locations, I mean, long term, it's probably the right play. You and I know, look at YouTube, look at Twitch, look at streaming, look at gaming, look at Amazon, look at Netflix and Facebook and staying home and working from home and Zoom communications. The life that we live is changing before your eyes faster than you can even imagine. It is happening. That is how I'm able to sit here in this computer behind this camera and speak to you and make a living. It is just changing and it's just happening so quick. But if we look at Microsoft over the past week, let's see how those Robinhood users have done. Well, let's see. Doesn't look like they're winning, but it doesn't look like they've accumulated too big of a loss over the past week. So over the past week, we have seen it go down as far as maybe 4% or so, but right now, currently, it looks like it's only trading down maybe 2% on the week or so, give or take a bit. Now, if we look at the long-term chart, which is a 20-year weekly chart, the longer-term perspective will suggest that Microsoft is overbought. The statistical average for the stock is $93. So why are these stocks trading so much higher than their 20-year average? Could it be we're in the biggest market bubble of all time? Many will tell you yes. I will be one to say probably. Is it because these companies have such high chances of being the most awesome companies throughout our lifetime? Yeah, probably. But to the same degree, does it make sense to be taking the risk on top of this market? That's up for you guys to decide. But from our statistical averages, it does suggest that pretty much all the stocks we have shown you are overvalued. So we will see how this all unfolds. Will the Robinhood users that are holding these stocks at all of these all-time highs make out over the next couple of years? We'll see. It'll be fun to see. I gotta say, this has been a great video. Hope you guys like it. Make sure to smash the thumbs up button. Tickle it, massage it, rub it, whatever you're comfortable with. I just like when it gets tapped. That's all I gotta say. I will see you guys on the next video. Everybody take care, and thanks for tuning in.